It is Tuesday, January 29th, 2019. It is just about 55 minutes after the New York market is closed. So we're looking at the pound dollar, and I want to address a question that I get on a pretty regular basis about the trade copier, and that is, do I trade the news with the trade copier? And the answer is yes, when I get a valid signal, and if I can confirm why the movement is actually taking place. Uh, Economic data, trading the news, sometimes it can also be what we saw today with the news coming out of the UK about that time that candle broke out here. This was just about almost 4 hours ago, 3 hours ago. All of this was taking place and it was closing below this support low here. I'll review exactly the strategy that I used to get into the trade, but that in itself is almost an opportunity to trade something very, very similar to the news. Of course, they're not always going to be, some of these events like this, they're not always going to be posted on, for example, Forex Factory's economic data calendar. Sometimes they're just these events that take place. If it's a vote or something to that effect, where we can sit back, a few months back, we watched the vote take place in the United States, and then sometimes it can be political, like a presidential election, things like that. And I talk about the strategies behind trading the news. They're not always going to provide an opportunity. Not every news event will provide an opportunity, but when it does, I wait for the technical signal to give me confirmation. And during that time, what I'm doing is I'm digging. I'm looking for the source of why whatever is taking place is happening in front of me on the charts. So I'm going to go ahead and open this up. This is the 1 hour time frame for the pound dollar. Again, this is just a few hours ago. And you probably saw this if you were trading about 3 or 4 hours ago. There was an initial spike up to the upside here. It went up, it went up pretty high. I mean, it started to move around a little bit and then drop right back down. And I have a strategy that I call the continuation breakout trade. And this was actually, the low here was at 28. This support level was up here. So we had a candle. I was waiting for a candle to close outside of this range. So I had this week's high at 1.3216, and then I had this week's low up to that point before this candle broke down here. The low was 1.3128. So that range right here in and of itself is what I call a consolidation range. It's the way I look at it. And then I wait for a 1 hour candle to break outside of that range. Now, I'm not going to get into the specifics. I've talked about it during the webinars and some of the free training that I've done and some of the videos on the website also, including the YouTube channel. I talk about the methodologies behind identifying the actual breakout, like what, qualifies as consolidation. That is a very critical, important answer that you have to have. It's a very important part of this component to be able to confirm this continuation breakout trade and trade it like this. When I use this strategy on the majors like the euro dollar or the pound dollar, the stop loss is 55 pips and the take profit is 55. So it's basically a 1-to-1. When I use the continuation breakout trade on, let's say, the pound yen, I'm targeting a 250 pip final target, and I'm still just using a 55 pip stop loss. So in that case, the reward is much higher. I don't get too many continuation breakout trades on the pound yen that are valid and confirmed. They only come around every once in a while, but when the market provides the opportunity, I'm ready to take it. So as all of this was taking place and I saw this activity, I could see the news. I have a few paid sources, and then of course, like everybody else, some free sources. We're all sort of following along different people on Twitter to see who's going to post the quickest. I always recommend paying for a news service. You're going to hear that data, you're going to hear that information a lot faster, but sometimes there's additional commentary when a lot of these other websites start to analyze that data too, and it might help you with some of your decisions. You don't want to take a trade recommendation. What you want to do is take that information and understand the implications and the outcome of whatever it is that's causing this movement. Is it going to cause the pound to weaken, or is it going to cause the pound to strengthen? That's the information that you have to learn to decipher. So at this time, I'm just waiting at this point. I'm watching all this activity. I'm watching it spike up and down and moving around, but I can't do anything until this candle closes below that support level. It's critical that I wait for that candle to close if I want to trade it as a continuation breakout trade. Now, I'm not saying that you have to wait for the candle to close if you have another strategy. Of course, there's other strategies to be able to trade something like this. But as far as this continuation breakout trade strategy, the strategy itself, I have to follow all of the different checkpoints and the rules to the strategy, which is to wait for this 1 hour candle to close outside of this consolidation range. By doing that, during the time that I'm waiting for this candle to close, it gives me the opportunity to get out there and to start looking for the source of what's causing this movement and to then confirm it. There are times when we get movement like this and it's based on a false rumor. So I talk about this. This happened, I remember a more recent time that had a bigger impact. It was 2015. I believe it was the end of May or the beginning of June. And it was during the Greece crisis. There was a comment that was made by an official in Greece, and it was posted on the internet, and it was going to have a pretty profound short-term impact on the euro-dollar pair. And the euro-dollar dropped as a result of that comment. And about 10 minutes later, the euro-dollar bounced back up, and it was because it was proven that the comment that was made by this particular political official was a false comment. Somebody contacted him, and he said, I didn't make that comment. That was a rumor. It was a lie. So you get sometimes these situations where people, it still happens today. I mean, you watch all these videos and you watch these movies and you hear all these stories about back in the old days, how people would manipulate the markets and stock prices and things like that. And to a certain degree, it can and does continue to happen. It happens by larger firms. Obviously not in the way that I'm talking about, but it can sneak by. There are opportunities. And the interesting thing, and I've had this conversation with a lot of my students, is that I never hear about the after effects of something like that. So back in 2015, when somebody had made that comment, it was an opportunity for somebody out there or a group of people to capitalize on this 40 to 60 pip immediate drop that happened in the euro dollar. And again, that was off of a rumor. They timed it. They knew exactly when that rumor was going to hit, where it was going to be sent, where it was going to have the biggest impact. Again, we still see it every once in a while. You have to prepare for those events. One of the advantages for waiting for this candle to close means that, again, I get the opportunity to get out there and find out the source. Why is it moving? I always ask myself, why is price moving? Why would I expect it to continue to go down to any one of these expected targets? I need confirmation. So again, that's one of the reasons why around news events, and this sort of plays out in a very similar fashion when I'm trading, let's say, for example, any other economic report that's on the economic calendar, like let's say non-farm payrolls. Non-farm payrolls every once in a while will create a continuation breakout trade, and that news is delivered at 8:30 New York time. So by waiting for this 1 hour candle to close, that means I've got to wait 30 minutes. So I have 30 minutes to analyze the data, confirm, make sure there's no revisions that are going to offset, versus the headline expectations on those numbers, and then make sure that I'm trading in the right direction, and that this breakout is going to continue in the direction of the breakout to that 55 pip take profit level. Now, again, there are other ways to trade the news where you could get in quicker, right? There's different strategies. You can look at a 5-minute chart. There's a break of the 5-minute bar, things like that. If you've got the confirmation, you don't necessarily have to wait that long. And sometimes if I have valid confirmation of a prior signal, I don't have to wait for the continuation breakout trade. But that's what this strategy was all about. It was just about waiting for that continuation breakout trade. Now, of course, with the type of news that was creating this movement here, this price action, that is one of those events where, again, it's not like a set in stone event where the numbers are what they are. There's no revisions. We know that. And there's not going to be a whole lot as far as the expected change to those numbers. So you can comfortably and safely trade that economic report. But in a situation like this where you're getting statements and comments, and then you're getting the commentary after, and you're getting this sort of back and forth reaction with the marketplace, sometimes you can see there's going to be a move in the opposite direction of the breakout. That's what actually started to happen here. So when I got into this trade with that 3-pip entry and confirmed this as a valid continuation breakout trade, which in fact it is, the type of news that I was trading in some cases can cause price to reverse and bounce around a little bit. You get that deep retracement and it sort of scares you, right? You're in the trade and you don't know if it's going to hit your stop loss. You see it retracing against you. It started off moving in the right direction, but now you see some comments and things pop up a little bit later on. So again, you have to be using the right stop losses. 55 pips usually holds me into a trade like this. This is effective, this particular strategy, 90 to 95% of the time. So a 55 pip stop loss was fine. It was going to hold into the trade. But again, based on some of the comments, sometimes it's better to be safe than sorry. If you're going to get, again, that speculation after the initial move, and then you're going to get people that are going to try to move it the opposite direction, you want to lock in profits. Sometimes it's a good idea to take that 17, 20, 22 pips and then wait for a second entry opportunity. If this is going to drop a lot lower, then I'm going to be looking for an opportunity where maybe by chance price might return back to a old support level, which could then be perhaps a new resistance level, and then look for that reversal pattern to trade it in the same direction to the downside. It's just like giving me that second entry opportunity on a breakout after the initial move. So this was a relatively safe trade. Again, it wasn't something that was like a report that you can look at on that economic calendar from Forex Factory. This was something a little bit different. But Brexit has provided us numerous opportunities to trade these continuation breakout trades over the last few weeks. There were multiple continuation breakout trades the week before, and then the week before that, there was opportunities to sell it. The continuation breakout trade, again, is a strategy that I use on the 1 hour time frame, and it requires the use of confirming with these indicators, but confirming the reason why price is moving.